Hey guys, it's Crossroads here. Today I wanted to talk to you about SoFi, specifically this news that came out today about the $3.2 billion in agreements that SoFi secured for their loan platform business. Now, there are aspects of SoFi that are not too exciting right now, but the loan platform business is not one of those. This is a platform that, as of last year, a year ago, it did not exist at all. They launched it late last year and they continue to accelerate as far as agreements. Now, the news that came out today, it's actually kind of a two-parter. It says SoFi secures 3.2 billion expansion on the loan platform business across agreements with Fortress and Edge Focus. And we have two bits of this. So one of these is an extension that builds upon SoFi and Fortress, what they announced back in October when they kicked this platform off. And the other part, and we'll talk more about this too in just a moment, is the 2-year agreement to originate 1.2 billion worth of loans for this platform. That's a collaboration between Fortress and Edge Focus. Now, this is an exciting thing for SoFi, and it's a meaningful source of revenue. They're close to a run rate now based on margin and estimates that we had before, although they did indicate that as they continue to expand, that margin will go up. In fact, the direct quote from the previous quarter was, "We're starting to scale our loan platform business, which is generating margins around 50%, slightly north of that. So you can expect to see continued margin expansion in that business." But they're at an annual run rate of maybe just a little bit south of $500 million. It's going to be a little bit less. We don't know for sure that this $2 billion that was authorized, if it's a 1 year or 2 year, that wasn't in the description. The $1.2 billion is over 2 years. And so I expect that they're going to continue to announce a lot of these. But imagine not even having this platform and announcing it, and now they are generating close to a $500 million. Needs another announcement or two to get there. It's exciting times, and this is just the beginning. So we can see here, this is an announcement that's from back in March, not that long ago, just last month, that they announced a $5 billion agreement with Blue Owl Capital Funds. This one is over 2 years, and this is, of course, the announcement from today. And there's been a lot of announcements that they've come out with late last year as well. So this is a very good thing for SoFi overall. Don't mistake, though, it's not 3.2 billion that's going to SoFi. Now, some people have expressed concerns over the loan platform business, but I don't think that they're understanding the product. This platform, the way it works is SoFi partners, and they partner in this case with Fortress and also with Edge Focus. And so they have an idea from those companies that they want $3.2 billion worth of loans, and they want those to fall under a certain credit score rating. And so some of them will be lower and outside of the typical credit box for SoFi. And so they would have been loans that if somebody had applied to SoFi before, they would have said, nah, that's okay. And others would have been maybe perhaps those that SoFi would be happy to lend, but outside the volume that they were comfortable in lending. And so rather than pass on those, they instead make some money immediately. About 4.25% is the estimates based on the prior 2 quarters. We'll see if that holds true over future quarters. But the really interesting thing is this is not going to impact SoFi at all if things turn south in the economy, if people start defaulting on their loans. The vintages for SoFi hold up pretty well, but in this case, they hold on to these for no more than a week. Usually it's that day or later that day or the next day, but it can be up to a week. Well, they hold them on the not even on the balance sheet, but while they're transitioning those over to those that are authorizing it. So now the reason why this is exciting beyond just the revenue for SoFi, which certainly it is that it indicates 2 things. Now, one of those 2 things is that there is a large, healthy appetite for loans like this. Let me look at what Edge Focus had said specifically. This is one of the 2 partners that are mentioned. And by the way, they mentioned the SoFi plus Fortress. That's the exact same article as what I showed earlier. And this also came out today, which, by the way, I think also indicates perhaps at least what the tech piece might be. And so on that, it says Edge Focus closes inaugural 150 million ABS deal, launching its tech-enabled credit platform into the capital markets. And so what that is, they mention it here. There's actually 2 pieces of it. One is called Origin, Edge Focus's credit decisioning and pricing engine. They say it's there to originate and structure high-quality data-driven collateral at scale. And the other is Lens. It's a portfolio analytics and performance monitoring platform. So really probably more the former rather than the latter. But it's really interesting because it shows that even though this company is doing something perhaps somewhat similar to SoFi's loan platform business, they're saying, hey, we have an immense appetite beyond what we can do ourselves. We need to go and buy some loans and authorize SoFi to get some loans for us. And so they mentioned this here. The first transaction received strong support from a sophisticated group of institutional investors. There is a clear appetite for differentiated, data driven credit exposure, and we are excited to build upon this momentum with future issuances. Certainly, that is what led them also to partner with SoFi. Their loans tend to perform very well. There's a massive appetite for this. And we knew that there was towards the end of the year and beginning of the start of this year. The question mark in many people's mind was with the macro uncertainty, with all the tariff noise, with the global trade war, with perhaps Smoot-Hawley 2.0 edition, would there still be as much of an appetite? Well, I think the answer is yes. We saw that March 13th. We see that again today, that these companies, these businesses, which they make their living off of this, they're not just speculating, they see a huge opportunity ahead. And that's even before we look at rate cuts. Now, the other interesting piece, too, is it shows and demonstrates the strength of what SoFi is doing as far as our loan platform business. For a company like this to say, hey, we've got a great product, we're building this technology platform, but we need more loans. SoFi does it well, we're going with SoFi. Now, there's other companies out there, there's a lot of competition, but this is essentially risk-free money for SoFi that just goes almost straight to the bottom line as far as that 4.25 or so percent margin. Maybe if they sell higher volumes, maybe it's a little bit less. We don't really know those details. We'll just have to see how they perform over time. Nevertheless, this is incredibly bullish for SoFi. I'm excited to be an investor. I, again, do think even though if you look at the stock, it's been kind of a disaster. Today, it was up about 3%. Year to date, it is down 22%. Not what we were expecting, but hey, it happened last year as well. We, of course, peaked right around 18. And I still think that there's a scenario, a not unlikely scenario, where we get to 25 or so. And in SoFi at the end of the year, macro has to stabilize. There has to be more certainty. But there's a lot of things going right for SoFi. And the biggest piece of that really is that loan platform business. So let me know what you think in the comments. Was this something that really got you excited? Did you end up buying more SoFi as a result? Did you say, hey, you know what? I'm out of this. They're selling loans. I can't have them making extra money. It's too much. No, I'm just kidding on that one. But let me know what you think in the comments. As always, thank you for watching, commenting, and subscribing. And until next time, happy investing.